Adrian, thanks for being with us today. We're seeing that gold obviously continues to be stuck in this trading range. I think a lot of people are wondering, is it ever going to get out of this range? It's just stuck. What are you seeing maybe on Friday and moving forward?
Yeah, I think it takes a while to get over, big and unexpected declines. And we had a sort of unexpected decline, I think, particularly in December, but really throughout the end of the last quarter. And I think gold was beginning to move back up, and then you had you had a very sharp decline in December that kind of rattled the market. There were some reasons for it. Some made sense. Some, to my mind, didn't make sense, but there were reasons. But nonetheless, anytime you get an event like that, I think it just takes the market a little bit of time to get over it. So rather than a particular sort of event driving gold, which could always happen, of course, I just think it's going to be a sort of a more slow and steady recovery. If you look at the last, it's in a range, as you say, but if you look at the last 6 weeks, the lows have all been higher, and that's a certainly positive thing. I guess you could say 1, 2, 3, 4 lows, and each one's been higher than the one before. And if that pattern keeps up, then gold should resolve itself to the upside. But maybe another few weeks yet.
Are we looking at? The ECB came out. Mario Draghi came out. He kind of talked down the euro. What kind of effect is that going to have on gold?
Well, certainly a stronger dollar. Gold has traded quite in parallel with the euro for some time now, particularly the euro, and so that would definitely be a negative. But anytime you look at a market, there's always positives, there's always negatives. The main positive for gold, it seems to me, is the same thing that we had a year ago, and that is just extremely accommodative monetary policy around the world. I don't think that's changed. In December, of course, with the Federal Reserve Open Market Committee minutes, when they were released, we had a comment that some members were looking forward, I'm paraphrasing now, some members were looking forward to the end of bond buying program sometime in 2013. And I think that's the comment that really grabbed the gold market's attention. But the committee went on to say that a very accommodative monetary policy, their own words, would continue for the foreseeable future, and that it would continue even after the economy started to recover on a strong basis. So Ben Bernanke himself has set the Fed has set the 6.5% unemployment target. I guess this is a long-winded way of saying I don't think that's going to change anytime soon. We may have a change in the bond buying program specifically, but the idea that the Federal Reserve is going to start tightening money anytime soon is a very, very remote possibility. Mm-hmm. And at the same time, you look at Japan with the new government coming in there, being very accommodative. You look at Britain, a new Bank of England governor has suggested that perhaps policy isn't, there's room for an even easier monetary policy, which when you think what England's done in the last few years is pretty astonishing. So I guess all around the world, central banks are erring on the side of ease. And yeah. I just don't think that's going to change anytime soon.
Yeah.
And that is the fundamental thing that's positive for gold.
Great. Yeah. Well, Adrian Day, thanks as always. Looking at central banks, maybe they won't stop their easing anytime soon, which isn't necessarily a bad thing for the yellow metal. Thanks again, Adrian. We'll talk to you soon. Take care.